The cryptocurrency market moves at lightning speed, creating opportunities for massive gains if you know how to seize them. While most traders struggle to make consistent profits, a select few have discovered powerful trading hacks that can dramatically accelerate results. This isn't about gambling or blind luck. It's about leveraging hidden market inefficiencies, psychological edges, and precision timing to extract profits while others hesitate. If you've ever wondered how elite traders consistently outperform the market, the answer lies in these carefully guarded strategies. Today, we're pulling back the curtain on the most effective crypto day trading hacks that can help you supercharge your gains, starting tonight. Most traders fail because they focus on the wrong things, chasing hype, ignoring risk management, or relying on vague predictions. The traders who win big do so because they exploit repeatable patterns, capitalize on market psychology, and execute with precision. These hacks aren't about complex indicators or overcomplicated strategies. Instead, they rely on understanding how the market really works, where liquidity pools form, how stop hunts play out, and when retail traders are most likely to make emotional mistakes. By mastering these dynamics with the right mindset, you can position yourself on the right side of the market's biggest moves. Before we dive in, if you're serious about taking your trading to the next level, make sure to like this video, subscribe for more high-impact trading strategies, and drop a comment below with your biggest trading challenge. The market rewards those who take action. So let's get started. Hack number 1. The liquidity grab strategy. One of the most reliable patterns in crypto trading is the liquidity grab, where price briefly spikes beyond key levels to trigger stop losses before reversing. Smart money knows where retail traders place their stops, usually just above resistance or below support, and intentionally pushes price there to collect liquidity before making its real move. If you can identify these setups, you can enter trades with minimal risk and explosive upside. Here's how it works. When price approaches a clear support or resistance level, watch for a false breakout, a quick wick beyond the level that gets sucked back in. This is often the market taking out stops before reversing. The key is waiting for confirmation, such as a strong rejection candle or a surge in volume, before entering in the opposite direction. This hack works exceptionally well in ranging markets where liquidity is clustered around obvious levels. Hack number 2. The pre-pump scanner trick. Cryptocurrencies often pump suddenly, but the smartest traders don't chase. They get in early by using simple scanners available on most exchanges. You can detect unusual volume spikes before the crowd notices. The trick is filtering for coins with low to mid-market caps, as these are more likely to see explosive moves. When volume surges by 300 to 500% in minutes without a corresponding price spike, it's often a sign of accumulation before a breakout. Set your scanner to flag these anomalies, then check the order book for hidden buy walls. If large bids are stacking up while price remains stable, it's a strong signal that a move is coming. Enter with a tight stop and ride the momentum as retail traders pile in later. Hack number 3. The news fade play. Most traders lose money on news events because they buy the hype too late. The pros do the opposite. They fade the initial overreaction. When major news hits, like exchange listings, partnerships, or regulatory updates, price often spikes violently before retracing as the emotional buying exhausts itself. To exploit this, wait for the first 5 to 10 minutes after news breaks. If price surges on high volume but then stalls, look for reversal patterns like long wicks or bearish engulfing candles. Shorting into this exhaustion can be incredibly profitable, especially if the initial move was overextended. Just ensure you're out before the next wave of buyers potentially steps in. Hack number 4. The weekend trap setup. Weekend trading in crypto is notoriously illiquid, meaning small orders can cause exaggerated moves. Many traders get caught in false breakouts on Saturdays and Sundays when volume is thin. The hack: trade against weekend breakouts unless confirmed by unusually high volume. For example, if Bitcoin breaks resistance on Saturday with mediocre volume, there's a high chance it's a trap. Wait for a rejection candle or a drop back below the level. Then enter short with a stop just above the fake breakout high. This strategy works because weekend moves often correct when full liquidity returns on Monday. Hack number 5. The whale watching method. Whales move markets, and if you know where to look, you can follow their footprints. Tools like the Binance liquidation heat map or large order tracking on Glassnode can reveal where big players are positioning themselves. If you see a cluster of liquidations building above or below the current price, whales will often push price there to trigger them. Another tactic is monitoring taker buy/sell ratios. If large market buys are dominating but price isn't rising, it could indicate distribution before a drop. Conversely, heavy selling pressure without downside movement suggests accumulation. Putting it all together, these hacks work because they exploit predictable market behaviors, liquidity traps, emotional reactions to news, and the influence of large players. But they require discipline. Never risk more than 1 to 2% of your account on a single trade, and always wait for confirmation before entering. The best traders don't win every trade. They win consistently by letting their edge play out over time. Check the links in the description. These trusted resources can help accelerate your journey to financial freedom, from mastering crypto gains to building long-term wealth. If you're ready to implement these strategies, start by focusing on one hack at a time. Master the liquidity grab first, then add others as you gain confidence. And if you found this guide valuable, don't forget to like this video, subscribe for more advanced tactics, and share your biggest takeaway in the comments. The market moves fast. Will you be ready? Disclaimer: this content is my personal opinion and is intended for general information purposes only, not financial advice. Nothing herein shall be construed to be financial, legal, or tax advice. The content of this video is solely the opinions of the speaker, who is not a licensed financial advisor or registered investment advisor. Purchasing cryptocurrencies poses a considerable risk of loss. The speaker will not be held responsible for any losses or gains. Always do your own research and advise a professional before making your own investments.